Okay. And also do take note that any information or opinion that is presented in this webinar series or in the slides are purely for educational purposes and do not constitute as investment advice. All right. Okay, I believe I'm having some issues with my webcam, so you guys can hear me clearly. You can see my slides, and we'll get the webcam running up for the next webinar. Okay, so I'm your host for today. My name is Ketan Ramachandra. So I'm from Everest Fortune Group, where we have been the best finalists for best FX and equity research for the following years. So Everest Fortune Group and IronFX have a special partnership where we uh, deliver educational webinars such as this one to you on a regular basis. All right. Okay. So just a very simple agenda for today. Um, Sorry, just let me do something. Right. So just a simple agenda for today. So it will be basically be oops, sorry. Okay. Right. So end the poll. Get it out of the way. Okay. Okay, sorry. Okay, so um we'll start off with the basics. What is a trading journal? What should you monitor in your journal? How can the how can a journal improve your trading, and whether we should go via the manual or automated trading route. Okay. And at any point, do not hesitate to drop your questions regarding anything. And once we are done with this as well, we can look through any uh, instruments that you are interested in, whether it's a uh, forex, currency pair, or gold, or oil, or even perhaps even the indices, right? So this is after this. Once we're done with the trading journal webinar, we can go through some technical analysis as well and see what's lined up for on the economic calendar this week as well. Okay, so what is a trading journal? Basically, it is a diary, right? Simply put, it's a diary that tracks your trading performance, right? And how do you do it? By recording every single trade that you place, whether it's a long trade or short trade, whether you close it out for break even or it's a winner or a loser. Every single trade has to be recorded. And you can use either a manual trading journal, which is basically an Excel spreadsheet, or you can use an automated journal, which are available online. Right, majority of them are subscription based. So depending on what you're looking for, you could subscribe to a relatively cheaper monthly payment, or you could get something with all the bells and whistles that would cost you a little bit more. Okay, so what are the items that you should monitor in your journal? Okay, so what are the typical items that are included, right? Of course, we will have the date and time of a trade. That means when we've opened it and when we've closed it, because this can depend on your trading strategy. If you're an intraday trader or scalper trader, your date will be the same most of the time. And then, of course, you have to record your entries as well. Okay. And then, of course, if you're a swing trader, position trader, your open and entry dates may be may differ, of course, because like if swing position may last a few days or sometimes perhaps even a week. So you would have to take note of that and record it down. And then, of course, you have to identify the instrument being traded, right? If it's a currency pair, is it the dollar, yen, euro, cable? And then if it's a commodity, is it gold, which is XAU, USD, or is it crude oil, which could be WTI or Brent? And also, is it an indices, right? An index. Could it be the S&P 500, the Nasdaq 100, the DAX, and so on and so forth. Okay. The next item that you would have to include would be position size. Right now, what is position size? This is the type of contract that you are trading. It could be the standard contract, the micro, the mini, or the nano lots, right? Depending on uh, your preference. Okay, and also, of course, not only your preference, it also depends on your account size, right? If you're starting off with a relatively smaller dollar value account, then of course it's best to start using a mini or nano lots position. So you're able to get used to the platform, get used to the instrument, and you're also able to uh, back test your strategies as well. And ideally, you should be back testing your strategy on a demo account and then switch over to the live account to implement it. And of course, if you're starting off with a relatively smaller dollar value account, then it is best to start at least the first dozen or so trades using at least mini or nano lots. And of course, the larger account size you have, you could perhaps start, if you have a larger account size, perhaps it would be good to start with a micro lots before moving on to standard lots. Okay. Okay, next is direction, right? Because we can go long, we can go short, right? Be it currencies, indices, commodities, right? Depending on your view for that day or your view over a slightly longer period of time, indicating the direction is important. And of course, the next one would be entry and exit points, right? So once you have done your perhaps your technical analysis and also a bit of fundamental analysis, you would have determined your entry and exit points based on several technical indicators, for example. And then the next column to include would be a trade result. You need to obviously update that once the position is closed. If it's a intraday or scalping uh, trade strategy, then of course this is updated daily or even every few hours. And of course, if it's a swing trade, then of course this would be something that would be updated a couple of days later, for example. Okay, so next is once we have the trade result, of course we will know whether the trade was closed for a profit, loss, or perhaps even if at break even, right? So profit and losses should be calculated at an absolute level. That means in dollar terms, and also as a percentage of your account size, right? Because this will help you to determine your risk reward ratio as well. Generally, for myself, uh, I would like to use 3-to-1 risk reward ratio. So what this means is I'm risking one 1% of my capital or account size to potentially make 3%. Okay. Now, of course, with every trade, it doesn't always go according to plan. Sometimes, if even though we may be in the right direction, it could be a risk reward of 1 to 2, for example. And sometimes, if the move is really an extended move or with lots of momentum, it could perhaps even be a 1 to 4 or 1 to 5 ratio. Okay, so that is why it's important to generally identify your risk reward ratio. And for me, I would use a 1 to 3 ratio, which means the maximum I would risk on any single trade would be 1% of my account size. Now, this doesn't matter if doesn't matter if I'm using a standard, micro, mini, or nano lot. It just basically uh, means that whatever's account uh, lot size that I use, the risk that I'm going to expose myself to on this particular trade should be no more than 1% of my total account size. Because having when you're starting off, this is generally a very good ratio to start off with, to be able to see whether your strategy is your strategy or strategies, depending on if you have more than one, are they successful over the long term, right? So basically, is the strategy consistently bringing you profits, right? So once you have uh, are familiar with that particular instrument, you're familiar with various market environments, then you can probably uh, size up your account gradually, and then yeah, move on to slightly bigger lot sizes, for example. Okay. How can a journal improve your trading? Right. Okay. By tracking all of your winners and losers, you're able to review your trading activity over various time frames, right? Daily, weekly, monthly. So if you're a intraday trader or a scalper, you would be reviewing your trades every day, right? At the end of the day, you would look through and see, okay, which instruments, which trades went well, which instruments were they, and perhaps during what periods of time. Was it during Asia trading hours, European trading hours, or the US trading hours, right? You'll be able to identify various patterns, and also you'll be able to identify which instruments you are actually good at, right? Maybe your technical analysis and a bit of fundamental analysis is better for, uh, let's say, dollar yen, right? But with uh, uh, pound dollar, it's not so good. And also, you will be able to uh, find the right trading style, right? As I mentioned, there's various trading approaches. You could be a swing trader, position trader, intraday trader, scalping, right? So it also allows you to uh, identify what is the right trading strategy for you. And the best way to, of course, to do it is start off on the demo account first, and then switch to a live account and back and forth to try and figure out until you know which one is the right trading style for you. And of course, by doing that, it will also help you to identify your strengths and weaknesses. That means like yeah, it'll help you to see, like I said, which currency pairs or which commodity is uh where you're good at performing the TA or performing the fundamental analysis. It also helps you to improve risk management, because by improve risk management and having discipline, both these two are intertwined, because there's no point having a very detailed or precise risk management process or framework in place, but you don't have the discipline to follow it through. Right? It is important to establish a risk management framework, and it's just equally as important to have the discipline to follow it to the T. Right? There's no point saying I'm going to have a risk reward of 1 to 3, but when things start going south, you increase that risk or that stop loss level to 2. Right? There's no point. What's the point of doing all the TA on fundamental analysis and then establishing risk management framework and settling on a risk reward ratio of 1 to 3, but when the trade goes live, you do the complete opposite, right? So improving your risk management and having discipline go hand in hand, right? So this is how a journal can help you. Okay, so we'll start off with the manual trading journal, because personally this is what I use. I guess I'm a bit old school. I like to use an Excel sheet, and I put in all my record all my trades, right? So this is an example. The picture that you see here is an example of how a typical manual trading journal could look like. So of course we'd have the date. He doesn't have the time here, but you can include a column for time. You would indicate the pair. In this case, in this example, you just have all currencies. Then LS is whether you're long or short. Size is your, of course, your position size, whether it's a standard lot, uh, mini, micro, and how many, right? And how many contracts you're running. And of course, you have your entry, your stop loss levels, your potential and your take profit levels, and of course your risk reward ratio as well. Okay, so let's just switch on to the website. Okay, so this is where that first link was. That first link will take you here. So basically this is a pretty good website to read through and to start creating your first manual trading journal. So it takes you step by step how to do it. So it's fairly straightforward. And of course, there's also various videos on YouTube as well to help you start your first manual trading journal if you do run into a bit of trouble, right? Or a bit of difficulty trying to set it up. So this is quite straightforward here. And of course, you can add any other columns that would be of importance to you. Okay, so this is a website here, and the other one is uh this Traders Union website where they have done a review of several trading journals. Okay, these are all paid subscription journals. Okay, just to be clear, we are not I'm not promoting any of these particular trading journals that are described here, that are listed here. Of course, you're free to Google and do your own research and try and find uh, the right trading journal for yourself. But this is just an example of what is currently available in the market, and you can look through this website, and of course Google for other websites as well to find out what they are offering and how you can incorporate it with your broker as well. So they give you the pros and cons of uh, of the available journals that each of the journals that are listed here, and also just as a price comparison point of view, just to get an idea. Okay, so here we have Trading View, Trader Sync, Edgewong, Trade Metria, Trade Bench, and Chart Log. So it tells you what are the supported markets. For example, you got stock, futures, and forex here. You got and then for Trader Sync, sorry, you have stocks, forex, options, and futures. Edgewong, you've got CFDs, and so on and so on, right? And then you also have the estimated cost as well. And you also have the free option. Some of them do have a free option as well. So you can even start off with a free option. And if you have less than 30 trades per month, for example, if you're using TraderView, then this is pretty much a free trading journal for you to use. And Trade Bench is basically 100% free and so on. Like I said, I'm not promoting any of these trading journals. It's just something that I Google and I saw this website that was reviewing certain journals, and I I found it pretty useful. So you can look through this, and also of course do your own Google search to search for any other updated journals that are available. And of course this website here, Excel Dummy, also gives you a good head start on trying to create your own manual journal in Excel as well. Okay. Okay, next is an automated trading journal. Okay, so I don't use an automated trading journal, but let's just explore this and see um what's available, right? Hang on, let me select the link. Oh no, wait, sorry. This is wait, hang on. I think it's the same thing, right? Oh no, sorry, it's something else. Okay, so I'm on um the website here. Again, this I've just randomly Googled for automated trading journals, and this is one of the examples that have come up. Again, I'm not promoting this company or any other trading automated trading journal. So let's just type in Google best automated trading journal and see what we come up with. Okay, best real world trader view. These are all some of them seem to be manual. What about automated? Okay, no, all right. Okay, I'll just use this as an example. So basically, this is a fully automated trading journal that seamlessly integrates with MetaTrader 4 and 5. Okay, and then you're able to sync all your trades for journaling and analysis as well. So as you can see, this is the typical dashboard that you would see here on Forex Book. It'll give you your top pairs, the latest trades, when it was executed, when it was closed, and profits or losses in terms of pips as well. And perhaps you can probably change it. Yeah, you can toggle between pips and profit as well. Okay, and it connects with many brokers as well. So the trade images are automatically captured for each trade. So that's good. You can also rate your uh trade entries and exits. I guess this is just, I mean, it's a personal rating, so that's I don't know if it's a really good feature, but this the fact that it automatically captures your trades, that's really useful. You can add your comments as well, and you can start journaling the trades. Okay, so this is just an example of some of the automated uh trading journals that are available. Okay, so pricing wise, okay, so you've got a free version as well. Um, that has the following features. Okay, you can journal, automatic trade sync, full dashboard, economic news, trade sharing. Okay, history is limited to 14 days, and you don't have access to reports and fast chart image capture and whatnot. But the the paid full access version is about 19 US dollars per month. It's relatively affordable, I suppose. And then, of course, you can always try it out for free for 7 days first. And if you're not happy with it, you can try something else. All right. Okay. So this is just the first part of or the first part of today's webinar, looking at the journals. If are there any questions? Do you guys have any questions regarding to setting up the trading journal, or what other uh, columns or parameters that you should include? If not, we'll let's look at what's happening in markets now, and let's cover like gold, oil, and some currencies as well. All right, is that all right, everyone? You can see what's happening in markets today, and what are some of the key economic data points coming up. All right, okay, so I'm on the uh this website called Forex Factory. Okay, so Forex Factory is has it's a great resource page, and one of the most important resources that I look at on this page is the economic calendar. So, which is here, right? So if you go to the main Forex Factory homepage, click on calendar, it brings you here. So my time is on GMT. So you can of course choose the correct time zone uh, according to where you are, of course, right? So save your settings. I'm putting it all on GMT uh, time, which is UTC 0. And then let's just filter. So you can filter through various periods in time. You can look at historical events that have occurred. And you can let's just see from today till Friday, or let's just put it till Saturday. Apply settings. And you also have the filter icon. So I'll select the filter icon and generally choose the first two or the first three dependent. So usually I do take the first two most impact, most high impact events. And of course, event types, I will select all, and currencies, I will select all as well. Okay, then I apply the filter, and this brings me the list of key economic events that are taking place this week. Right. So the good thing about Forex Factory, sorry, not Forex. Yeah, sorry. Why did I get my names confused? Okay. Good thing about Forex Factory is not only that you're able to filter through historical and future economic events. You also have the graph icon here. So you can click on the graph icon and you're able to view it directly on this website. You don't have to go to another website or Google for something else to view how this particular data point has performed over the last few years or months. And if you click on the folder icon, Okay, hi. Okay, there's a question from Galaxy. Right, can you explain again the setup on the calendar? Yeah, yeah, of course, for sure. Let me just rewind it again, okay? Right, okay. Maybe I'll just start from the top. Okay, so let's just go. See, you don't have it. I'll just Google Forex Factory. Oh, what happened? I didn't click on it. Okay, sorry. Forex Factory, right? I'll just click on that. It will be it will be usually the first result on the page. Okay, so click on Forex Factory. It brings you here. If it doesn't bring you here, just look out for this icon here, calendar, right? But generally, it should always bring you here. You go to calendar, right? And then you click on the time option. So this is the time here. Click on time. So I'm currently on GMT time, UTC plus 0. Okay. Then save your settings. You can, of course, put it through AM, PM time, or you want 24-hour clock, whatever's your preference. Click on save settings. And here you have your filter for the dates. So we're going to choose today, 24th of May till 27th of May, Saturday. Apply the settings. Then you go to here, filter on the right, click on filter. I will choose, typically I choose the two most high impact events. Of course, you are free to select all the options as well. But for me, I prefer to choose the two most high impact events. Then, of course, I will choose all event types, and currencies I will choose all as well. And then I apply the filter. All right. Okay. Galaxy A30, was that all right for you? Yeah. Okay. Next is, as I said, the good thing about um, Forex Factory is you also have the graph icon here. So whenever a particular data set event has data point, it will have a graph. Of course, monetary policy statements and press conferences won't have a graph because it's all text. But anything that has a number assigned to it, you can click on it and it'll show you the history, right? So this is the official cash rate of New Zealand. So the Reserve Bank of New Zealand um, raised their interest rates today, right? Earlier today, they raised their interest rates at 2 a.m. GMT. So very early in the morning, GMT time. They raised it from 5.25% to 5.5% in line with forecasts. And also the good thing about this, you can click on the folder icon and it gives you further details or description about that particular data point. And you can also click on the latest release, which takes you to the actual page, right? So in this case, it'll take you to the page of the Reserve Bank of New Zealand, where they'll give you further details on what has occurred, right? Or, or on this particular data point. So on 24th of May 2023, official cash rate was raised from 5.25 to 5.5%. And if you click on the date, you are able to read uh, more about what happened during that meeting. That is of course, if you wish to do so, right? And then similarly, for other data points, okay, like we had UK inflation earlier today as well at 6 a.m. GMT, where CPI on an annualized basis uh, has continued to fall, but I believe core CPI is rising. So if we go to latest release, you can, and then here we have it. So release 24th of May. This takes you to the official, the Office for National Statistics. This is the UK agency, government agency, and then here it'll give you all the detailed breakdown of this UK CPI data. So as you can see here, okay, you have the CPI, the headline CPI reading, as well as the IH is, what is IH is, okay, CPI that includes housing costs, and you also have CPI that the core CPI as reading as well. Okay, so this is where you can get and this is how you can use Forex Factory to find out about what's happening. Okay, one of the key events that are happening later on today would be at 2:05 p.m. and 6 p.m. GMT. Okay, we have Treasury Secretary Janet Yellen speaking at a fireside chat titled U.S. economy. Now, it is unsure whether she's going to touch on monetary policy, but a lot of the latest news has been revolving around the U.S. debt ceiling limit. This has caused volatility in markets recently, especially last night with the negotiations between President Joe Biden and the Speaker of the House, Kevin McCarthy, coming to a deadlock. So basically, just to be aware of what's going on with the US debt ceiling limit is that the debt ceiling limit will be hit on 1st June. So basically, we are less than 10 days away from the US government going into a shutdown. So if no resolution is achieved before this date of 1st of June, it is very likely the US government will end up in a temporary lockdown or shutdown where federal workers won't be paid, federal services won't be running, and this would definitely introduce a lot of volatility into financial markets, be it equities, currencies, and commodities as well. Right, so do take note of this because this is something that's uh, at the forefront now. Oh yes, okay, sure. I'll quickly go that. Okay, and then the other thing is 6 p.m. FOMC meeting, right? Just take an eye on that. Okay, so we'll do the second now. Everything will go to live trading. All right, Tukwasi, is there any particular currency pair that you would like me to look into? Okay, otherwise, okay, so this is I'm on the 4-hour chart for the dollar index DXY, right? This is a dollar index that tracks the performance of the US dollar relative to all its peers. So as you can see, earlier in the day, we had identified uh, the first resistance level at 103.6. Okay, so let me just quickly show you how we identify various support levels, overlapping support and resistance levels. Okay, so in this example, we can see that in 18th of May, the dollar index hit 103.60, retreated and fell to 103, and then bounced higher, found resistance at this level at 103.60 yesterday, before finally breaking through it today. Okay, so what we are trying to do here with horizontal overlaps is to try to find moments in time where price has reacted off a particular level pretty obviously, right? Whether it served as a resistance or a support, it's very important to identify such levels. So as you can see, how this level of 103 had served as a resistance in the past back in April of 2023, later served as a resistance level again on 17 May. It retraced down before finally breaking through the level at 103. And it made a new high at 103.60 before retracing back to this support level as well. So you can see very clearly here in this overlap support or this overlap line that what used to act as a resistance in the past has now acted as a very significant support in the future. Okay, so you can see it go up here. And also, uh, okay, we had also run a Fibonacci sequence here. So Fibonacci retracements are done from the bottom left to the top right. So let's just ignore this current move here. So as price rejected off this level of 103.60 and started retracing, we had our, I guess, swing high over here. So then we ran our Fibonacci retracement from the bottom left to the top right. And as you can see, when you select, okay, when you select the Fibonacci, when you do run the Fibonacci retracement, you select all the fibs, and it gives you all the Fibonacci ratios here. So on the upward leg of the move, the Fibonacci retracement levels are identifying potential support levels, right? So once price has peaked and starts pulling back, the Fibonacci retracement levels tell us what are the potential support levels for this instrument. Okay, so 23, as you can see, 23.6% lines up squarely with what was previously the resistance level here. Also acted as resistance here as well. And then so let's just say as price started to pull back on the 19th of May, we would have done the Fibonacci retracement. We would have also drawn the overlap, horizontal overlaps as well, to identify that this price level of 103 would act as a potential significant support level. And it did, right? So on Monday, when markets opened, the dollar index fell to this level and rebounded squarely off it to go higher, right? So this is an example of how we use Fibonacci retracements and horizontal support level. Similarly, the second support level was identified close to the 38.2% Fibonacci retracement. And not only that, if I were to just extend this a little bit, right? If I were to pull it across, as you can see here, price had reacted off this in April, acting as a resistance. And finally, it acted as, and then again, it acted as a resistance back in middle of May before finally breaking through on 16th of May, made a new high, retraced down, came very close to what was the previous resistance and as a support, and then it continued to break out higher. So in terms of the resistance levels, and let me just zoom out a little bit. So you can see we have this very long downward move here. So we've done the Fibonacci retracement on this leg of the move from the top left to bottom right. So previously we had identified various Fibonacci levels. So, okay, basically once price moves through the particular level, so in this case 23 point, okay, in this case for this one, sorry, for this particular move, we'll just keep 23 and 38. Of course, if price were to retrace, break through 23%, if it had broken through 23%, the next support would have been at 38. If it broke 38, then the next support would have been potentially around 50%, would have, which I think should have lined up with this as well. So if I do 50 here, yeah, sort of, no, probably this would be 61. Yeah, about it's slightly closer to 61. Okay. Right. Okay. So now price has clearly broken through this resistance level. Ah, okay. Which one is take profit and loss? Okay. This definitely depends on whether you're going long or short, right? So I'm not going to talk about profit and loss levels, but basically we'll talk about support and resistance levels. So because then it depends on whether you're going long or short, right? So if you had seen that price had was reacted off the first resistance here at 103.60 and started pulling back, and you thought that okay, this is a potential for a short, then you would have identified this first support level as a potential take profit, and stop loss level potentially would have been somewhere close to the first resistance or just slightly above the first resistance. Okay, so we generally when we do this type of analysis, set we don't identify the levels as profit and losses, because what we're trying to do is establish significant levels of resistance and support. And then when you know exactly what is your trade approach, whether you're going to go long and short, you can then uh, assign the take profit and loss and take stop loss levels to this previously identified resistance and support levels. Okay. So as I was saying here, on this downward leg of the move, let's just put in all the fibs just so we can see how this has progressed. So when this bottom was made here at 100.70, the first level of resistance, because this is a downward leg. So now all these Fibonacci retracement levels act as potential resistance levels. Right. So now as it comes up, you can see price did break through the support the retracement level of 23.6%, but it didn't extend too far. So you can see that the level of 23.6% served as a relatively decent resistance area, and it served this for a period of time from mid-April all the way till mid of May, for so almost about 3 to 4 weeks before price finally broke through this level, right? And the next level of resistance would have been at 38.2%. Yet again, it found some resistance at this level, pull back before finally emerging to break through this level and go higher. Okay, as you can see here, 50% did not serve as any did not act as a resistance level at all. So that's why it's important to take note that there may be instances where certain levels will act as serious resistance, and in other cases it may not. So because nothing always works the same every time, so just to take note of that as well. So it broke through the 50% retracement very easily, and then it started respecting this retracement levels here, right? 23 and 38%. So now the next level that has not been broken on this Fibonacci retracement is the 61.8%, right? So now I'm just going to remove all the others and just put 61 and 78%. So as you can see, now it's very likely that uh, as there's a strong demand for US dollar coming in now, it's quite likely that dollar index could push towards the 61.8% Fibonacci retracement, which is coming towards almost close to 104. And then we also have an overlap resistance here. As you can see, price has bounced off once, twice, 3 times here in the past before finally breaking through. And of course, it didn't act as a resistance here. It didn't act as a support here either. But as you can see, these three bounces are suggesting that this is this should now be a relatively strong resistance level, which also lines up close to the 61.8% Fibonacci retracement. So do take note of that. So if you have gone long on the dollar index around this level, like for example, if you had a breakout strategy and not a reversal strategy, and you're looking for a breakout, you would have gone long at the first resistance, and perhaps you'll be looking to take profit between 103.95 and 104.10. All right, this is how we can use the horizontal support and resistance levels, line them up with Fibonacci retracements, and then use these levels to identify potential trade uh, setups, be it reversals or breakouts. Okay. And then this is how you would identify potential take profit areas, right? The second resistance that is the overlap horizontal resistance together with the Fibonacci retracement at 61. Sorry, at 61.8%. Okay. And you can see I've added in the 78.6% retracement level. So this would be potentially the next level, but also we would also like to look out for uh horizontal overlaps as well. But as you can see here, price action here around the 78.6 is pretty choppy. There's nothing very clear and level. So the only other level that I would say we could potentially use as the next support, although this is not a very good level in terms of a resistance level, because you can see here price has rejected of this level at 104.60 here in 17th of Feb. It got rejected here on 22nd of Feb as well, but then it finally broke through, acted as a support between towards the end of February, broke through, acted as a resistance. So you can see at various points across this level of 104.60, this horizontal overlap has acted as a relatively decent area of support, combination of support and resistance. So very likely now, if price were to break through the second resistance and move higher, the next area of resistance would be between 104.60 and the region where 78.6% retracement level is. So between 104.60 and 104.80. Okay. So uh, so if dollar index is rising, then naturally we would expect euro dollar to fall, pound dollar to fall, and of course dollar yen to rise. So let's take a look at how those currency pairs are faring. Right. So here we go. So similarly, we identified we like to use a combination of horizontal overlaps together with Fibonacci retracements. Of course, by all means, do not just use only these indicators. I mean, you can, of course, use the indicators that I'm using and complement it with your current or favorite technical indicators as well, right? I think important, what is important to note is to understand why you're using that particular indicator, how it works, and whether is it giving you the right signals, be it in terms of going long or going short, or is it not only in terms of giving signals, but is it giving you uh, or is it identifying major resistance and support levels? Is it identifying major turning points? I think that's more important, right? I think it's important to understand which indicators are working for you. And of course, by all means, you can complement your favorite indicators with the ones that I'm using, which is the Fibonacci retracement, and also, of course, the method of identifying overlap, support, and resistance levels, right? So ultimately, because there are so many indicators, and everyone has a different grasp of each particular indicator, and also has a different trading style. So feel free to incorporate whatever works for you, and whichever indicator that you truly understand, and that's actually helping you to identify uh significant resistance support levels, identify uh significant turning points, and also that helps you to structure a trade in the correct direction. So, right. So in this case here for the euro, we've run this Fibonacci retracement here from the bottom left to the top right. So along the way, it has broken many levels. So let's just put all the fibs up. So as you can see here, the first level that would have acted as a potential support would have been at 23.6% retracement. And also you can see that the price action here, uh, it is fairly, this level also has a fairly decent overlap in terms of resistance and support areas as well. Okay, so one thing about Fibonacci and horizontal overlaps approach, I would say it works better on like the daily time frame or the 4-hour time frame, because you're looking for significant levels of support and resistance, or you're looking for significant areas where price action has actually reacted in a meaningful way. Okay, so you can of course try and do it on smaller, on a lower time frame as well, but I think what I've seen that works better for us is we've done it on the daily and 4-hour chart, use those levels, and then of course you can zoom in into the hourly time frame or the 30-minute time frame based on the level that you have identified on a slightly higher time frame, right? So it's like taking a top-down approach, right? You start from the top using the daily time frame or the 4-hour time frame to establish or to identify potential resistance and support areas or levels, and then zoom in onto the lower time frames and perform your other technical analysis in those time frames. Okay, so as you can see, 23.6% was acting as a pretty decent level of support. So as the price came down here, you can see it bounced off this level twice, retracing higher before finally breaking through, I guess, on the third attempt. So once that level breaks, this Fibonacci retracement level becomes invalid as well. Okay, so the next Fibonacci retracement level was at 38.2%. But see, we don't just use the Fibonacci levels blindly, so to speak. We also try and match it with significant areas of support, right? So as you can see here, this price level of 101.090 has served as support over here fairly well. And although it didn't act as a very good support area, but actually in the end it ended up acting as a fairly decent resistance area as well. So you can see the benefits of how overlapping uh, horizontal levels can potentially act as resistance and support levels as well. Okay, so now that we've talked about that, I'll just get rid of all the other fibs and just keep 61.8. So now this is a very key support level here, because the 61.8% is the golden ratio of the Fibonacci. So generally this level can offer significant support. In this case, it will offer significant support. And not only is the Fibonacci retracement uh, the only indicator, we also can see overlapping price action over here as well. I mean, we can see a very strong overlap over here at 101.0747. So you can see in the middle of March, this region acted as a resistance area. It finally broke out of it on 21st of March. And then on a few days later, although yes, the wick did extend beyond the support level, but it actually uh, price actually pushed back higher, found support before going higher. So if for example, if you had been looking at the Euro USD earlier in the week, Monday, you could see that okay, Euro did not break through this first resistance at 1.0828, and I think likely that the euro or the US dollar is going to gain strength. So I expect the Euro USD to fall. So let's just say you may have assumed we have taken a position here at 1.0815. I would have put my stop loss just slightly above the first resistance, and I would have identified this region as a potential take profit area. Of course, you don't have to take your take profit area exactly at this level. You may take it a little bit higher as well. Sometimes I generally like to take it just above or under a particular level, depending on whether I'm long or short. And of course, you can either take out the entire position or a partial position as well. All right. Okay. And then similarly for the pound dollar, you can see this has acted as a relatively strong support back in April, and then again on Tuesday. And now it looks like potentially it could break through, but it's finding it very hard to push through this support level as well. So that is how, see, we have not done any Fibonacci retracements here because pound dollar has been very choppy. Basically, when we do Fibonacci retracements, we don't do it just for the sake of doing it. We like to see very decent moves. So what I mean is, for example, if I look here, and if let's just say I did a Fibonacci retracement here, this is not a good uh, way to draw the Fibonacci, because you can see this is the trend line here, right? So what we want to see is the price action following the trend line very closely, be it to the upside or to the downside. What would be a good Fibonacci uh, uh, retracement or level, or I mean, sorry, position to draw would be on this leg. So as you can see, price has moved very closely through this level, and then once you draw it here and you get all the fibs, you can have very decent levels of support. So 23% did not serve as a decent support at all, but what served as a relatively good area of support was 38.2%. 38.2%. And also, I guess you could consider 50% served as a relatively well support as well. So if you had been shorting pound dollar after making this peak, you would have identified these levels as potential take profit areas. All right. Okay. So just before I end off, I'm just going to launch a poll. So this is just a webinar rating. So I hope uh, I appreciate if you guys can just give us your feedback on this so that we can we're always looking to improve our webinars and topics that we cover so that we try and keep you updated with the uh, latest events, latest price action, and what you guys should look out for. All right. Thank you very much for your feedback and for your interaction as well. I hope you guys have a great trading week. And okay, just like I said, just before I end up today's session, do take note that at 2:05 p.m. and 6 p.m. GMT today, we have Treasury Secretary Janet Yellen speaking. She may touch on the US debt ceiling limit, which could have implications for equity markets, currencies, and the price of gold. We have the FOMC meeting minutes being released, which will give us further details and insight into what was actually discussed at uh, uh, in the meeting for the month of May and why uh, Chairman Powell and his committee members raised 25 basis points. And also the other key events to look out for tomorrow, 25th of May, Thursday, 12:30 p.m. GMT. Look out for unemployment claims. Unemployment claims basically tell us how many people are applying for employment benefits. So if you see this number coming in higher than the forecast and higher than the previous months. Okay, if it's higher than forecast, then naturally it'll be higher than the previous month's reading. So what this means is there are more people applying for employment benefits. So that means there are signs that the labor market in the US is cracking. And that means that would imply that the Federal Reserve need not be so aggressive moving forward. So generally, when we have a data print that is higher than the forecast, and in this case also will be higher than the previous month's reading, generally it tends to lead the US dollar to, or it tends to cause the US dollar to sell off. So if the US dollar is selling off, then we would see euro dollar rising, you'd see cable or the pound sterling pound dollar rising. Conversely, if this number comes in softer or lower than the forecast and also lower than the previous month's reading, that means the labor market is very strong, it is resilient, and we can expect the US dollar to gain further. And of course, then euro dollar will fall, cable dollar will fall, and dollar yen will rise. And the last one to look out for will be the PCE price index at 12:30 p.m. GMT on 26th of May. So this is the personal consumption expenditure price index. It is another measure of inflation or another gauge for inflation, and it's actually the Federal Reserve's preferred measure for inflation. So they'll be watching this data point very carefully for both the headline and core readings on a monthly basis as well as an annualized basis. All right. All right, everyone, I've come to the end of today's webinar. So I hope you have enjoyed it, and yeah, do take note of the trading journal aspect as well, whether you prefer a manual Excel sheet type of journal or whether you like a paid service journal that is automated as well. All right. Thank you everyone for your time today. And I hope this has been a great session for all of you. And I'll see you guys at the next one. All right. Take care and have a great week trading. Take care, guys.
Hello everyone, my name is Emily and welcome to another video. Today we're going to talk about automated trading systems. Automated trading systems, also referred to as algorithm trading, involves the use of an algorithm to execute trades according to the predetermined criteria. The systems allow traders to establish specific rules for both trade entries and exits. Once these are programmed, they can be automatically executed by a computer. The benefits of automated trading include more trading uptime, minimizing the impact of emotions during the trading process, and faster execution. To get started with automated trading systems, you need to decide whether you want to build your own system or use a third-party algorithm. If you build your own system, you can choose every aspect of the strategy and have a better understanding of how the system works. It could open and close trades based on timing or price, using technical indicators to confirm your entry and exit points. For example, you could build a system to automatically buy 100 Netflix shares when its 50-day moving average goes above the 200-day average. Or you can automatically sell 100 Netflix shares if the market reaches volatility levels you are not happy with. If you are not confident enough to build your own system, you can use a third-party solution instead. This works in a similar way to a self-built system, opening and closing trades according to set criteria. However, you will have less control over the customization of these parameters. Whether you build your own automated system or use one which has been pre-built, it's important to backtest it thoroughly to make sure it works in the way you want before you put it to work on the live markets. MT4 is popular if you want a third-party solution because MT4 provides a marketplace where you can conveniently access pre-built algorithms to get started with automated trading. It's important to note, though, that automated trading systems have some downfalls that you should be aware of, like the possibility of mechanical failures. For instance, if an internet connection is lost, an order might not be sent to the market. Automated trading systems need to be monitored because of the potential for technology failures, such as connectivity issues, power losses, or computer crashes. Automated trading system can experience anomalies which could result in wrong orders, missing orders, or duplicate orders. If the system is monitored, then situations like this can be identified and resolved quickly. Thank you so much for watching us today, guys. Bye-bye.